Imagine waking up one morning, opening your banking app to pay a bill or check your balance, and your account is just gone. No warning, no call, no letter, just a message saying your account has been closed. Your direct deposit is bouncing. Your automatic payments are failing. And the worst part? The bank did absolutely nothing illegal. This is happening to thousands of people right now, and if you have a bank account, and let's be honest, who doesn't, this could happen to you too. Stay with me because what I'm about to share in the next few minutes could save you from a financial nightmare you never saw coming. And if you want to stay ahead of updates like this that actually affect your money and your life, make sure you subscribe to this channel right now and hit the bell icon so you never miss an important alert. So let's talk about what's really going on here, because most people have no idea that their bank has the legal right to close their account at any time for almost any reason with little to no notice. This isn't a glitch in the system. This is written right into the terms and conditions you agreed to when you opened that account, the ones most of us never actually read. Banks call it their right to terminate the banking relationship, and they exercise it more often than you'd think. Now you're probably asking, okay, but why would a bank close my account if I'm not doing anything wrong? That's the thing. It doesn't always come down to something you deliberately did. Banks are under enormous pressure from regulators to monitor accounts for anything that looks suspicious or unusual. If your account shows patterns that their automated systems flag, things like frequent large cash deposits, sudden changes in transaction behavior, receiving money from certain businesses or platforms, or even just inactivity, that can trigger a review, and sometimes the outcome of that review is a quiet, permanent closure. This also happens in a practice that's been getting a lot of attention lately, sometimes called debanking. Financial institutions have been quietly closing accounts of customers they consider too risky or too complicated to deal with from a compliance standpoint. It's not just happening to shady characters either. Small business owners, freelancers who work in cash-heavy industries, crypto users, and even people who've simply had one too many disputes with the bank have all found themselves suddenly without an account. Here's where the real damage kicks in. When your bank closes your account, it doesn't always stay private. Banks often report account closures to a database called check systems. Think of it like a credit bureau, but specifically for banking behavior. If your account ends up in check systems for reasons like unpaid fees, overdrafts, or suspected fraud, other banks can see that report when you try to open a new account, and many of them will decline you. So now you're not just locked out of one bank, you could be locked out of the entire traditional banking system for up to 5 years. That means no checking account, no savings account, no debit card, and a whole lot of problems with your everyday financial life. The mistake most people make is assuming it won't happen to them because they're a good customer. They've had the same account for years, they pay their fees, they don't overdraft. But here's the truth. Loyalty means very little to a bank's compliance algorithm. These systems are automated, and they don't know your history the way a human would. All they see is a pattern, and if that pattern looks off, the process kicks in before any human even reviews your case. So what can you actually do about this? The first thing is awareness. Start by checking if you have a check systems report right now. You're entitled to one free report per year at checksystems.com, and you should pull it just to see what's there. If there's an error on your report, you have the right to dispute it. Second, never keep all of your money in a single bank account. This sounds basic, but so many people are one closure away from not being able to access any of their funds, even temporarily. Spread your money across at least 2 institutions. That way, if one account gets frozen or closed, you're not completely stranded. Third, if you notice any unusual activity warnings or letters from your bank, do not ignore them. Respond quickly. A lot of closures happen because customers miss early warning letters and the bank takes silence as disengagement. Fourth, understand the difference between a voluntary closure and an involuntary one. If you think your account is at risk for any reason, it's better to close it yourself on your own terms and open a new one somewhere else before the bank does it for you. An involuntary closure looks much worse on your banking record than a voluntary one. And finally, look into second chance bank accounts and credit unions as a backup. Many credit unions have more flexible policies than big commercial banks, and some banks offer specifically designed second chance accounts for people who've had past issues. These won't leave you without options. Your money should work for you, not leave you vulnerable. The banking system has more power over your daily life than most people realize, and the best thing you can do is stay informed, stay diversified, and stay one step ahead. Share this video with someone who needs to hear it. because this is the kind of information that can make a real difference before it's too late.